We've had a fairly rough Tuesday for stocks. Coming off the close of the day, we saw the stocks dropping lower. And even at the Asian Open on Wednesday, we've seen stocks going lower. And it seems it's starting to get or to be a trend where at the start of every month, we're seeing stocks get lower. But this time there's a different reason, and we'll be looking at that in this session of the Market Watch series, where we cover the stocks, the charts, the news, and everything in the markets. So be sure to subscribe and share for more. It seemed as though we had fully recovered from the fears of last month with regards to the stock market. And the S&P 500 had recovered all along and coming back to July highs. But yesterday, towards the end of the session, we had S&P falling and breaking those lows. And it's now in a bearish structure because it changed character. And it seems as though this is what is happening flat out, but we do not have any significant movement when you look at the other currency or asset classes such as currencies. The DXY, for example, was very flat. So what happened? Yesterday we had the DOJ and it subpoenaed a couple of tech companies, and one of them included Nvidia. So the antitrust issues are going on. Whenever any tech company becomes big, it usually displays some monopolistic tendencies or characteristics. We'll be monitoring to see the situation. Most of the times it's usually just because of fear, and we end up seeing a recovery. So it shouldn't cause a lot of alarm, because we usually see this type of movement a lot of times and it usually ends up with a recovery. So there's nothing significant in terms of the bottom line for these companies. So we should see it resting at some key level. So at the moment we have that support zone we're seeing over there, and if it continues dropping lower, then we'll be looking for more support zones as the market continues lower. So we do not expect it to affect the long-term trend of the indices. So we'll still be monitoring to see. In fact, these are nice points to look at where buyers will be coming back into the market. Moving on to the dollar index, we have been very muted. We've had this theme of a strong dollar coming into the market, and it's because of other weak currencies and other weak economies. So we are not really expecting any other major economies, currency to outperform the dollar. And that is why we are having this theme of, we are seeing that the Fed has more room to cut because the US economy is looking pretty okay with those numbers that have been coming up as compared to these other countries or these other economies. Now, what we'll be looking at this week, we'll be looking at any catalysts for a weak currency that we're going to pair with the dollar. For example, on Tuesday and Monday and today, we had the Canadian dollar, which is one of the few currencies that really moved and really made a lot of pips in the market. And the reason was because we are seeing bearish catalysts from that meeting and that interest rate decision that is coming up from the Bank of Canada. Of course, they're expected to cut, and this is providing some bearishness for the Canadian dollar. So that paired with the US dollar provided a very good opportunity for longs in the market. And we had that on Tuesday, on Monday when we had a chance to pick up these longs. And today we'll be monitoring to see if indeed there will be bearish tones or undertones in the BOC as they have their meeting later in the day. The other currency that we're going to be looking at is the Australian dollar. Now for this one, it's not really news, but it's a speech. So we'll be trying to see in the speech if there'll be more hawkish or slightly less hawkish or dovish, and how that will transpire. Because if we are able to get some weakness from that, then it also becomes a very good currency to pair with the US dollar in terms of finding shorts in the market. For now, the Australian dollar has broken the structure, has changed character. So if we are seeing it turn, and we have seen quite a nice reversal. So we'll be looking at those key levels. Currently, it's at a support zone, and we'll be looking for any retracements. And if we find enough catalysts from the employment numbers, for example, today you have jobs, then that might be a good reason to see a continuation in that trend. So you're looking for positive news on the dollar and negative news on the Australian dollar to pair it with, so that we have that continuation of the trend. Having said that, thank you for tuning into this session of the Market Watch series. And if you want to trade any of these instruments, ensure to check out the website or the links in the description. And catch you in the next one.